Hello everyone, welcome back to my YouTube channel. So today we're going to be talking about I think I just posted a video previously and I'm bringing up this one once again to actually explain market structure and reasons why it matters as a beginner, not as a beginner but as a trader to actually look into this particular let me say structure when it comes to trading. So now let's consider this as your trading chart. This is Euro USD paired, that is actually EUR USD, that is the European currency versus what the let me say the United States currency, right? So now let's look at this for instance. When they say price is going to the upside, you actually see it means that price is actually making higher highs and higher lows. Let me go to this clear chart. It means that price is making what high highs and higher lows. So this becomes your high and then this becomes your low. So this becomes your when it is in an uptrend, it means it is a higher high, and when it is in a downtrend, it means what a higher low. So now let's look at let me say when it comes to let me say to the downtrend. In the downtrend, it means that this is your low and this is your what high. And in this downtrend, you actually have to understand the opposite of it means that this is a lower low. This is what a higher high. A lower high, right? So meaning that price is actually going to the downside. And how do you identify such things as to higher highs and higher lows? Now look at this for instance. When you are going to, let's say you are going to when you are looking at the chart and the chart is going to the upside and it hasn't broken the previous high yet, it becomes a range or let me say a consolidation point. Hence the movement of price. So we have three phases in the price action of let me say when it comes to price action, right? We have the consolidation stage and then the downtrend and then the uptrend, right? But we have two movements in the market, which is the trending markets and then what the ranging markets. But when it comes to how the market moves, let me say in categorically it moves up and down plus what sideways. That's the simplest way you can actually see. So this particular one is actually the sideways movement in price action. Now let's look at the other way that you can also understand market the better to you to differentiate between markets going to the upside and to the downside. So henceforth, let's say price is going up, right? It's going up, and then finally comes reach to a point where you see price changing its momentum and then slowing down a little bit. Now, when you see price doing such a thing, it creates lower lows and lower highs in a very rangeful manner, in a sense that when you go to the lower time frame or this particular price action, this becomes an impulse and you see small correction in the downside, then it pushes down, breaking previous lows of this particular area right here. Now creating another one up until it reaches a moment where price reaches its point of reversal, right, and it begins to go up. Now, when you go up to the let's say to the 4 hour, currently I'm in the 1 hour, you go up to the 4 hour, to the 5 hour, or let's say to the daily time frame, weekly time frame, monthly, what you will see is what a consolidation that has actually formed in the higher time frames. Now, when you come back to the lower time frames, so that's why you are always advised to look at market structure from the top to the down to be able to understand the narrative you are looking into. This might be a bit confusing to those actually starting, let me say momentarily, let me say within days actually. But as time goes on, watch this video once again, or probably I'll be doing another video introducing and let me say explaining further and giving you a basic understanding of price action. I don't want to go deep because I'm currently just in a rush, probably if I may say so, and I've already started this video. And this is already late. This is 11:50 p.m. and I need to take a rest, right? So now let's come back to this place. Why do we look for market structure? So I personally trade SMC, which simply means smart money concepts. And with SMC, you can see we have a very strong trending market right here, which is we have an impulse and a correction. Now we're looking for a next impulse, right? But this impulse came as a result of news, hence give a gap on other brokers. I'm using forex.com data right now, so you'll not be able to see the gap. But when I move to other sites like FXCM, let's go to Euro USD on FXCM, right? FXCM, yeah. So let's see FXCM. Oh my god, I have just disrupted my back testing session. Oh my god. Okay, no worries. Let's still go there. Let's still go there. Oh my god. So this has actually just Yes, so you see that there is a bit of what? You see there's a bit of gap in this area, right? There's a bit of gap in this area. Let's go back to the previous one that was, that is forex.com, right? That is forex.com. And let's go back to our current charts. And where are we? Okay, okay. I'll just write it. So explaining on, let me see the examples and how to actually identify. So now when you see the market going to the upside, this becomes your break of structure, right? And this becomes a break of structure to the upside, and this becomes your low. Now, anytime now you're waiting, you're saying that anytime price breaks this particular one, it goes what, to the downside. Hence, it has changed the momentum or the narrative. So with this, you can see that, oh, price is going to the upside. The fact that price hasn't broken yet, price is still trending, meaning you are anticipating that when price reaches to this particular area, it will go up, right? But if price breaks this, meaning we have a downtrend. You understand? I mean, price is trying to change each narrative, let me say, each character. You get what I'm saying? So now, let's just play this forward and see what we will need. So you can see this candle has actually broken this price action, giving us a narrative that price is going to the downside. Now, let's go to the 15 minutes. I'll personally wait in the 15 minutes to take a trade around this area, or probably, let's say the 30 minutes, I'll be looking to take it off of a block, or let me say a breaker block, right? But this does not actually make sense to you guys because it is still new. I'm actually doing this video for beginners, right? Absolute beginners. And I'm explaining this a bit further, but I'm kind of fast because I'm just trying to wrap up everything and make you guys to understand what I'm talking about. Like, if you don't understand anything, I'll be making the next video explain now in a bit slower and a very understandable way for you to actually see how the market moves. And as you know, it moves in ways step by step, right? Now, me wanting to take a trade here, I want to also take advantage of the move that is going back to the upside. So now, me want to take that advantage. Let's see how price plays out on the 15-minute time frame. So we have a low, right? And that low is this one. Now, why am I saying this one? Because this particular trend has cemented this one, making it a low. Hence, if price does break this, it becomes what? This one becomes a higher, let me say, a lower high. So hence the reason why it is my low. Okay, now we have a high. Why do I call this a high? Because price has cemented this particular high for breaking a low on the lower time frame. You will not understand this just for you, but so it has cemented it. So this becomes my high and this becomes my low. But I'm looking for any trade around this area, hence, because this is where I can find my other block. So let's see how it plays out. If price reaches there, I'll be taking a trade. If price doesn't, it's still fine. Okay, price has actually broken that area, but I can see how it has closed with a doji. So this one becomes an, let me see, a morning star because it is in a downtrend and it is reversing. So you can see, let's see how price will close with this. Okay, so now let me move to the 5 minutes. So 5 minutes is actually where I take my entries most of the times. Okay, so price has actually pushed and moved away from price, and hence we'll be looking at where price closes. I'll be waiting to see if price can come back after breaking this. As I said, structure, price will break this, come back and tap into this, and now we have a push into the back to the upside, right? So this other block is valid for me at the moment. If it doesn't, I'll also have another scenario of taking this if I don't see any break of structure, but I see something interesting. Okay, let me see. Okay, this is what I'm talking about. So currently I can just say I want to take my trade from here, and stop loss can be below, right? Can be below, either below this one, or I can choose to put my stop loss here. So this stop loss will be around, let's just say 20 pips of stop loss, right? So I'll just take 20 pips of stop loss, and I am targeting, my target is always 1 to 5, right? I always want to see 1 to 5 on my target, so I want to target up to this place, right? So what do I have? 1 to what? 1 to 4. Okay, 1 to 4 is still fine. I have to decrease my stop loss. Don't do this if you are the one trading, right? I am doing this because this is how I always do when people do it. I make the stop loss is wide because I want to protect myself from being stopped out before going to the, let me see, known direction, right? So now let's see. This is what I want to move. and price does this, that's a little bit of nasty things, and it shoots to the upside, right? So you can see from here, price will start going up. Okay, this is where we see price going up and breaking structure. So you see price will break, has broken structure here. Now you can take another entry from this place, and if I want, I can just, if I want to scale in more, I just put my trade here. Let me actually I just put my trade here, and with this I'll have a very small tight stop loss, right? Probably 30 pips of 3.5, I think it's right. And with this I have around 25% to hit. That's if it gets triggered, right? Okay, price went without me because it broke this structure and it just exploded. That is still fine. This, we have another area here, and it has left with us another block that we can actually look up to. Okay, so structure is very important, very, very important. So let's see how price returns to that area again. Okay, I think price just nearly missed. It missed actually. Okay, price has actually missed my entry. You can see it came here all the way, so I should have taken the breaker block, which is actually here. So you will not understand what I'm calling. I'm doing this for beginners, but for the intermediate who are watching this video, you actually get this because this is how they actually see the market as well. So if I had taken this, probably I would have been running around. Let me see, 14% by now. If I had realized the broker block and I had taken it, okay, but that's still fine. I'm still there with my 5% with me here. Now let's see how price goes. So price has broken structure, come back to this particular order block. See this slight movement. If I was to be trading on the lower time frame like the 1 minute, I will be able to see areas to enter. I don't know, but let's see how this plays out. I'm just going to try it out. Okay, just trying to see how it will have played out. Okay, so you see, just as I said, this is what happens sometimes, and you get stopped out when it is wrong. Okay, so yes, but I still stay with this one. This one is still in as it is very cemented low right there. Okay, so we have price breaking the structure. Let's see, it's an order block. Will it come to tap into it? Sometimes it does, sometimes it doesn't. And with this, I think we're close to hitting, and this we have hit our TP with the previous one, right? Okay, so this TP has been hit. Now we're looking for a different momentum to take the market to the downside. As I said, I want to take it up and then I push it back to the downside, right? Now let's see the downside. Let's see. Now this trade is taken. Let me see, it's hit profits. Let me just put it aside and you see what I'm looking at again. From here, I can try to take a trade from here, but I'm not taking. I want a confirmation trade to take. Okay, so price has tapped into the breaker block, and I have actually a nice high here that price broke with this momentum. It broke with this. Now let's take this as our breakout structure, right? Okay, it was breaking structure, and it was breaking the structure as well. So I'm waiting for this other block right there, right? There's another block here that I'm waiting for. I kind of love this other blocks as it is my thing. That is how I trade, and that is what I trade with. So with this one, I'm going to target back to the low of this, right? This low is going to target, and with this I have 9%. Let's backtest this. So I have no trade to look for. This could have been a nice trade, but there is always what I call trap. Like I say trap because it is actually a trap. Why is it a trap? Price broke. Let's say price broke his first structure from here. It hasn't actually gotten back to the other block, and it had a new break once again, making you believe that it's going to move from here as a recent low, and it's confirmed by going on to break a major trend, making you to understand, oh, from here I'm going to pick the recent order block. Picking it is always going to be a mistake. Now look at what is going to happen. You can see it is going to stop you out, definitely. Okay, then stopping you out, it goes up, a little bit of momentum, just trying to gather itself, and then tap and push to the downside. So you see, this is what is going to work out like. So this is probably a sensation. It's going to move this way, this way. Let's go to the one. I think it's not moving for 15 minutes, so that we'll see how it will move faster for us, right? Okay, then it goes back, taps you out, and triggers. Oh, barely missed me. Okay, no problem. I still have something. If it missed me, I go back and I see that there is also lower time frames. Also, make sure when you miss a trade, always go to the lower time frames and you see it earlier. Always go to the lower time frames and look at it well. In the lower time frames, I see a break obstructor. That is a change of character for me. And there's an order block here. This is the order block. Let me take my trade from here again. This one will even be minimized. Right. So this is 10. Let's make this 10 for 10 pips. Stop. That is 1%. Our first target being this low. And our second target being the previous low that I actually had. Right. So with this, let's see how it goes. And we are tapped into the trade. And we just push. Right. We are tapped in and we push. See how price has moved away from it. Hence the reasons why you need to always, right, backtest. Backtesting is the key to success in trading. You always need to backtest. So let's go and hit our target currently. Let me move to a 15 minutes so you can see strong movements in price and end this video quickly, right? And right there, I hit my target for the day, or let me see. So this has happened within when? All this has happened within, I think, a day and a half, right? And you have already hit, let me see, this one I have hit 5%. Let's say 5% here. We have already had a loss. So 5% meaning you have 4%. This one was not triggered. This one is 9%. So the, let me see, 4 plus 9 gives you 13% in less than a week, right? In less than a week. Unless you have a target of 10% every month to always capture. And with this, why is trading not good? Let's all venture into the world of finance and make sure we make a lot of money out of it. So I'm doing this video for we the beginners. Let's try our best and learn this as quick as possible. Do not forget to like, subscribe, and follow me on my Telegram to learn more on how I trade and everything. Yeah, so every link is in the description below. Do not forget to like and subscribe. Thank you.